Welcome back to Halftime Report on CNBC-TV18. Now let's talk about Signature Global. They came out with their Q2 FY26 operational update. Pre-sales down 28% on a year-on-year basis, quarter-on-quarter basis, also seeing a decline of almost 24%. Collections, that has just come in at around 2% increase on a year-on-year basis. But let's move on and bring on the management now. We do have the management of the company, Rajat Kathuria, who is the CEO at Signature Global, to talk to us about the Q2 update. Rajat, good afternoon. Thank you so much for joining in with us on the show. Let's start by talking about this decline that we're seeing in terms of pre-sales. Collections have been quite muted as well in Q2 FY26. One, what has led to this decline? And now for the rest of FY26, what could we be expecting from the company?
During the first two quarters, we've done sales in excess of 4,600 odd crores. So last year we achieved in a little more than 10,000 crores. It was about 10,300 odd crores of pre-sales which we did. So in the first two quarters itself, we've done more than 4,600 odd crores of pre-sales. So by and large, I would say the demand is holding up. During this first half, we've done just one larger launch within the region, which was of about 2 odd million square foot, adding up to about 4,000 odd crores of sale potential. Whereas in the later half of the year, which is Q3 and Q4 put together, we are launching almost 7.5 million square foot, which has a GDV potential of about 14,000 odd crores. So with these sort of launches coming in, we feel that we'll end up doing a fairly good number for this particular year in terms of pre-sales. And as far as collections are concerned, yes, I think we are staying in that roundabout 1,000 odd crore sort of quarterly mark. But, this will go up as we move forward.
Second half of this year, do you believe that you can cross that 10,300 crore mark that you did in terms of pre-sales last year? In the sense that for the full year, would you cross that? And if yes, by how much? And even on collections, you've done about almost 1,900 crores in the first half. Last year, you did about 4,400 crores. Do you have a target, a number in mind?
No, we stay committed to our guidance. For the year, we've given a 20% increase in pre-sales as a guidance number. So about 12,500 odd crores of pre-sales is what we're targeting, and we are fairly confident of achieving that number. The new launches which we are doing has a GDV potential of almost close to 14 odd thousand crores. So we are confident with that 12,500 odd thousand crores of pre-sales to be achieved during the year. And collections are expected to climb in Q3 and Q4 significantly.
Do you have a target for that, for the full year?
6,000 crores.
6,000 crores.
Okay. Rajat, you're sounding extremely bullish in terms of the figures that you have. But just wanted to understand that are there any kind of gyrations when it comes to, say, demand or pricing at this point in time? And if you could give us a sense in terms of what the on-ground impact is possibly with regards to, this uncertainty on the US-India front, and are there any ramifications on the business at all?
So see, Gurgaon, if you understand, it's quite a diversified, micro market. There's a lot of auto ancillary related entities which operate. There are a lot of MNCs which operate, and there's a lot of strong rubber from the Delhi market because, Gurgaon provides a very strong sort of, social ecosystem, and hence we continue to see a lot of migration happening from Delhi to Gurgaon. So courtesy these factors, it's not that, there's some huge impact of these US-India sort of, trade.
Not only that, just a general sense in terms of how demand and pricing is panning out at this point in time. Is it as robust as, say, what it was maybe a year ago?
See, a year ago was a very euphoric situation. The prices were going up like anything. There was no control and there was no idea. Even we failed to understand why prices really spiked during that phase. But honestly, prices continue to go up even as of today. So while the price rise has moderated, prices are still continuing to go up just because demand is holding up. And that's why, we are continuing to achieve such kind of sales numbers.
Okay.
So we stay positive, on the demand.
Sure. Rajat, also, are you seeing any issues in terms of delay, in terms of launches that we're seeing this time, or what is the scenario there? And luxury market, how is that doing for the company?
So see, we are doing this mid-market housing only. It's a fairly wide spectrum. Houses may start at, let's say, 1.5, 2 crores, but may go up to 3.5 crores. So we focus on this mid-income housing market. In Gurgaon per se, you don't find anything being sold for, let's say, sub 1 crore. That kind of, viability doesn't exist for any housing product given the land prices. So we are in this, average 2 to 3 crore sort of, price points. And at these levels, there are abundant end users which are there because there are quite a few players who continue to do, fairly expensive products or, target the luxury market. So, since we are doing mid-income housing and we are continuing to supply products on a sustained basis, we are seeing good demand.
All right. And just a final question. You're on track for becoming debt-free by FY27, right?
Absolutely.
All right. Take that point. Wish you and your team a very happy...
Debt-free? Yeah.
Sorry.
We should.
All right, take that point. Thank you, Rajat. Always a pleasure speaking with you. We'll speak to you post your second quarter numbers as well, and thereafter get a better inkling on how demand is. With that, we'll take a short break, come back on the other side. We track markets and a lot more individual stocks that are moving around. Stay with us.